is about the new Wall Street. You order pizza. The lawyers at Sullivan and Cromwell are working 1 million hours a day too. This is the game, right?
What makes a young person think they're so entitled when they're 27 years old, they manage to finish college and a degree, and suddenly the world owes them an oyster?
Let's go to a younger person who works a 35-hour work week up in the Republic of France, Boston, Massachusetts. Timothy Pynchon with Pioneer Investments. What have the last 2 weeks been like? Are you able to hide in the municipal bond business away from what we've been going through the last 2-3 weeks?
Well, other than being on vacation for the last week and a half, Tom, I've hidden that portion of it. But no, I don't think it's a matter of hiding at this point. I think that we felt a fairly heavy market that is acting in reaction to the equity market, the national debt crisis, the sell-off in corporates. And what we have found is that our fundamentals, once again, this is a repeating story, but our fundamentals have been very sound in munis, but that it's been a heavy market. But to both of you, and I've been dying all morning to ask both of you, so let me start with you, Tim. Harrisburg comes out with their announcement. It is Whitney-esque in its energy. Is that a precursor? Is that a one-off, Tim Pynchon? Tom, you're baiting me, I know. So no, it's not a precursor. Harrisburg, that is not new news. We have seen Harrisburg in the news for the last couple of years, and we know that there's a very specific situation that has developed in Harrisburg, and that they are always on the brink of either paying or not paying their debt service. Yeah, David. And so. Well, excuse me, I want to get David in here before we have to go. So, our question, David, please, for Tim Pynchon.
Yeah, the question I would have, Tim, is why is the long end of the muni market yielding above the long end of the treasury market? What is constructively wrong in the system? Is it funds? Is it distribution? Because you can have a AAA credit secured by Ginnie Maes issued by a housing authority yielding more than the 30-year treasury. They're equal credit. Why the gap? What's it going to take to close that gap? Well, I think that that's the question, right? It does not make sense from a fundamental standpoint and from a value standpoint. And this is the crossover that we always see, is that when we start to get to 105% of treasuries or so, that's a key ratio, and typically what we see is a crossover buyer, sometimes non-traditional in nature, start to come in and snatch up that value. What I'm seeing in this marketplace, and what I continue to see really all through this year, is that we've been full of value both on a relative basis and on an absolute basis.
David, jump in here again. David's down here dying, Tim. He's absolutely dying.
Tim, let me just propose a question to you. For the first time, we have treasuries, and people don't like them. They think that the treasury rally's gone too far. Is that discouraging the crossover buyer? And so the crossover buyer that normally would come in and arbitrage back the market keeps out because the treasuries are mispriced?
Well, I think that's playing a role without a doubt. And I think that what we're trying to do in our marketplace right now is to find an equilibrium. And so we've seen the equity market trying to find that equilibrium. We've seen the treasury market trying to find that equilibrium. But when you're talking about a 360 long bond and what is it, 260 or so on the 10-year, I mean, those are levels that we can work with within our marketplace. Right. And so what I like right now is that if you're thinking about going to cash, for instance, and you're earning 1%, and you can go into a AAA muni and earn 4%, and you can go into a single A muni and earn, 4.5% to 5%, then you're doing very well. That, to me, is great value in our marketplace.
Tim Pynchon, thank you for the update from Pioneer Investments in their municipal bond area. We greatly appreciate that.